You said something I wanted to circle back to. It was interesting the way you explained this, and it was that the income statement is it's like the connection point between 2 points in time, which are the balance statements. So if I understood that correctly, let's pretend for a moment we've got a balance statement that's January 1st of 2020 and a balance statement that's February 1st of 2020, and you see the income statement is the activity that's going on in between those 2 points in time. Did I get that right?
That's correct. And so really it's reflected, and really for all practical purposes, an income statement is really a subordinate account to a balance sheet, right? Because it's really the income activity that's taking place. That's the summary of how you made the income that shows up on your income on your balance sheet. So it's basically that explanation from the previous balance sheet. The income change is taking place during that period of time.
I've
That's
never thought of it that way, and that makes 100% sense in just a simple explanation.
Yeah, it really is important to understand that, because frequently, and that'll come back is that you'll draw a blank and come back and say, well, where is the beginning balance sheet? Because you really can't, you can't have classically an income statement. You can have a summary of expenses, of income and expenses, or cash flow and expenses, and not be tied to balance sheets. It's just really a summary of activity that's much like a checking account register, right? You're recording income or deposits and expenses or checks you wrote from it. But an income statement really is, or a profit and loss statement is really dealing with changes in the balance sheet that may not be reflected, in the same way, because of the accrued expenses that take place or the accrued income that takes place. So that's why when you're dealing with a true income statement, it's really almost always an accrual-based statement between two balance sheets. That's really more accurately what a profit and loss should represent. Otherwise, you're dealing with a cash flow statement, right? And that's what happened to cash between 2 points in time as well, right? And so a complete set of financials normally will include both. They'll include a income statement or P&L and a cash flow statement, because those activities are different. You can have strong cash flow and weak profits, or strong profits and weak cash flow in the same time frame, and it's just because of the way they're measured. And if you don't understand the one,
be sure to subscribe and hit the bell for notifications about new videos and interviews. And introduce yourself in the comments. Are you a buyer or a seller?